All right, if you're just starting out as a trading analyst, there is one single mental model that separates the people who succeed from everyone else. And this guide right here, it's designed to give you that exact framework. So let's jump right in. So let's kick things off with a simple question. But trust me, the answer to this reveals absolutely everything about a trader's mindset and their chances of making it. The question is, how do you really see the market? For a lot of people, especially when you're new, this is what you see, right? Just a chaotic, kind of random series of ups and downs. And it feels like your entire job is just to guess which way that squiggly line is going to go next. But see, that view is fundamentally incomplete. It's like staring at a single leaf and trying to figure out how the entire forest works. The pros, well, they're working with a much deeper, more structured model. And this right here, this is the light bulb moment. It's the core shift you have to make. The market isn't just some random chart. It's a living, breathing ecosystem. It's driven by the competing needs of all its different inhabitants. So here's our game plan for today. First, we're going to look beyond that price chart. Then we'll meet the key players in this ecosystem. After that, we'll dig into how traders actually generate returns. Then we'll walk through a professional analysis process. And finally, lock in your new trading framework for good. First up, beyond the price chart, it's time to understand the why that's driving the what you see on your screen every day. Okay, so let's unpack this because it's absolutely crucial. A market isn't a thing to be predicted. It's an arena. It's a place where all these different groups come to exchange things they need: risk, time, capital, all based on their own unique goals. And that price you see jumping around, that's just the side effect. It's the outcome of all those competing needs clashing with each other. Now, be honest with yourself for a second. Have any of these thoughts crossed your mind? That markets are totally random, or that some invisible force is hunting your stops? If you can't figure out who is behind a big price swing, well, these are all red flags. It means you're operating from a place of superstition, not structure. And pros just don't think that way. Okay, section 2. Let's meet the cast of characters. Who are the actual inhabitants of this ecosystem, and what on earth makes them tick? First up, we have the naturals. Think of these guys as the bedrock of the market. They're companies like airlines or miners or farmers. They aren't in the market to speculate. They're here out of necessity to hedge their real-world business risks. And because of that, their actions often create these really predictable structural patterns. Next, you've got the market makers. Their job is pretty simple: provide immediacy. They're the ones who are always there to buy or sell, and they make their money on that tiny gap between the bid and ask price. They keep things running smoothly. But here's the catch. When things get really crazy and stressed, they tend to pull back. And when they do, volatility can explode. And then, of course, you have the big movers. We're talking about asset managers and hedge funds. These are the whales. They're the ones driving those huge medium to long-term trends that play out over weeks or months, all based on their big picture macro ideas. Now, this is a huge one in today's markets: passive vehicles. You know them as index funds and ETFs. The really interesting thing here is that they operate based on a set of pre-programmed rules, not on any new information or brilliant idea. Their activity is totally mechanical, it's predictable, but the sheer size of their flows can move the entire market. So, we've met the players. Now for the million-dollar question. How do traders actually create returns in this ecosystem? I'll give you a hint. It has nothing to do with a crystal ball. It's about performing a specific economic function. See, professional returns don't come from magic. They come from serving a purpose. For instance, maybe you're playing the role of a toll gator, providing liquidity to someone who needs to trade right now and is willing to pay a little extra for it. Or maybe you're performing risk transfer, basically acting like an insurance company for another player who wants to offload some risk. Let me put it this way. If you can't clearly name which one of these functions your trade is serving, then you're probably the one being served and paying for it. Which brings us to the playbook. This is where the rubber meets the road. How do you go from all this theory and noise to taking structured, repeatable action in the market? This is it. This is the professional's loop. First, you assess the environment. Is it calm? Is it chaotic? Then you identify the dominant driver. Who is in control right now? From there, you construct scenarios. Not just one prediction, but a base case, a worst case, and a best case. Only then do you move on to selecting your tool and figuring out your size and timing. And maybe the most important part of all, after the trade, you review your process, not just your P&L. This systematic loop is what separates professional execution from just random gambling. And, selecting that instrument is so critical. A future gives you straightforward linear exposure. An option, on the other hand, gives you asymmetry. Your upside can be way bigger than your downside. And a swap can give you incredible customized precision. The tool you choose fundamentally changes the shape of your risk and your potential reward. All right, let's bring it all home and lock in this new framework. This is all about cementing that shift in your mind from superstition to structure. I mean, this slide says it all, doesn't it? The retail mindset sees randomness, conspiracies, it chases noise and reacts with emotion. The professional mindset sees structure. It understands that price is driven by flows, it follows a disciplined process, and it prepares for different outcomes with scenarios. On the left, you've got confusion. On the right, you've got clarity. This is the framework you need to adopt starting today. Look, if you remember just one single thing from this entire explainer, please make it this quote. Professionals start from structure. Retail minds start from superstition. Honestly, that one idea could be the most valuable takeaway for your entire career. So let's end right where we began, but with a completely new way of seeing things. The next time you pull up a chart, don't just see a squiggly line. Ask yourself a new question. Who is in control right now? Is it the naturals, the big asset managers, the market makers? If you start by identifying the dominant player in the ecosystem, you'll be on the right path to truly understanding the market.